So we are basically doing May, June 2018, paper 32, sum of ratio analysis. Can you read it?
YGP Traders Limited has been trading for several years and has a year end of 31st December. It buys and sells a single product and makes all its transactions on credit basis.
All
It has a large
transactions are happening how?
on credit basis.
So all transactions are credit. Just keep that in mind, okay? Go ahead.
It has a large bank overdraft and the directors are concerned about the working capital position of the business.
Okay. What are you supposed to calculate? Revenue, cost of sales, trade receivables, average inventory. Are you with me?
Yes.
Okay. Come on, read.
The following information is available for 2017. Every month, 1,000 units were sold at a selling price of $80 each.
Okay, fine. So I have to calculate revenue for the year, and they are telling me that every month 1,000 units are sold. Okay, so 1,000 units are sold. So how many months are there in a year?
12.
Every month 1,000 units are sold.
Yeah.
Selling price is how much?
80.
So what will be the revenue?
Uh, 960,000.
Okay, so I got my A part. Go ahead.
Payment for half of the credit sales were received in the month following sale. The other half was received 2 months after sale.
Okay, fine. When is my year ending? Do you have any idea?
31st December.
Okay, fine. So now I have Jan, Feb, March, April, May, June, July, August, September, October, November, and December. Okay. So 960,000 is my sales. Half of the credit sales is received in the following month. So can you tell me half of 960,000 is how much?
480,000.
480,000 I received in February. Okay. And how much do I receive in March? Other half is received 2 months after sale. So if I sell in January, in Feb I will receive 480,000, and in March I will receive 2 months after sales. So if I sell over here, yeah, tell me.
This is the total sales, right?
Yeah, this is the total sales. Yeah, so how much will I receive? In February, I'm going to receive 480. 2 months after sales. 2 months after sales, that means when will I receive my next payment? Can you tell me?
In April?
In April. How much?
480,000.
480,000. Okay. That means if I'm selling in January, I'm going to receive in February 480,000. So,
Miss, but every month is only 1,000, right? So how are you
1,000 units you are selling.
Yeah, so this is for total, like for the entire.
Now understand to me. In the month of February, how much would be my trade receivables? My trade receivables would be the sales of February. 4 months after, that means 2 months after, that means I'll receive in March. My this would be how much? It would be the sales of February plus half of Jan, my trade receivables. Are you with me?
Yes.
Okay. This I am talking about my trade receivables of Feb. Are you with me?
Yes.
Let's talk about my trade receivables of March. 2 months after sales, that means 1 and 2. So the remaining I will receive, and this is going to get waived off in March. Jan sales will get waived off in March. Yeah?
Okay. Yeah.
Okay. Now in March, can you tell me what will be my trade receivables?
The remaining half of Jan.
Sales of, no, I will receive in March, I will receive my Jan sales.
Okay.
So in March, my trade receivables will be sales of March plus half of Feb.
Okay.
You can tell me. Yeah?
Yeah. Okay.
Because when I go in the month of February, I receive half month of Jan and half would be my trade receivables. So every month my trade receivables would be the sales of that month and half of the previous month.
Yeah. Okay. Fine.
So every month I would say my trade receivables would be sales of the current month plus what? Plus half of previous month.
Okay. Yeah. Understand.
Yes. So
Yeah.
my
Yeah.
trade receivables would be 1.5 times of the sales. Yeah.
Yeah. Yeah. Okay.
Okay. So trade receivables at the end of the year. So I would have at the end of the year, that means I want to trade receivables of December. So it would be in the month of December, 1,000 units that is sold and into 18. That means it would be full of 80,000 plus half of the previous month, 40,000. So it would be sales of December and half of November. So my trade receivables would be how much?
120,000.
120,000. This was your doubt?
Yeah.
Done. Have you done budgetary costing?
Budgetary. Yeah.
Okay, then you should not get stuck in this. From my playlist, you did?
No, I did from the workbook I was practicing.
Come on. Company purchased 14,000 units during the year, and the purchase price was 50 per unit for some years. Can you give me the cost of sales?
It would be 50 times 12,000
50 times how much? 12,000. Why 12,000?
because those were the number of sales.
So I want to see the cost of the unit sold. So the unit sold is 12,000 to $50. So cost of sales is 600,000. Trade receivables is done. Now, at December 31st, 3,000 units, 3,500 units were in the inventory. And trade payables is 62,000. Can you give the average inventory?
Yeah. If average inventory is opening inventory plus closing inventory divided by 2.
Okay. Average inventory is opening inventory plus closing inventory divided by 2. What is my opening inventory? Closing has been given to me directly. It is 3,500 units. into $50 at cost I want. So it is 175,000. How about the opening inventory?
Opening inventory would be 1,500 because 12,000 units is the total cost of sales.
Sorry? Come back.
So we know the total purchases is 14,000.
Okay, total purchases is 14,000. Yeah, tell me.
And the closing is 3,500, so we have to work backwards. Like
14,000 minus 3,500. It's 10,500.
no, like the total purchase cost of sales is 12,000. So 12,000 plus 3,500.
So cost of sales is opening plus purchases minus closing. What is the cost of sales? The unit sold. You said 12,000.
Yeah.
Opening, I don't know. Purchases is 14,000 and closing is 3,500. So it would be
So it
12,000 plus 3,500 minus 14,000. Okay, so opening is 1,500 units
yeah.
into 50.
That'll be 75,000.
Yeah, so average inventory will become
75,000 plus 175,000 divided by 2, which is 120.
okay. Can you tell me what is measured by working capital cycle?
It is calculates the number of days it takes to pay for the goods purchased and the number of days it takes for to receive the goods that has been sold.
Or it would be the number of days to convert your net current assets into cash. Yeah?
Okay.
Okay, fine. How to calculate the working capital cycle for the year?
The
Can you
formula
tell me
is
the things that, yeah, tell me the formula.
the trade receivable turnover plus the inventory turnover minus the trade payable
Trade
turnover.
receivable turnover plus inventory turnover ratio minus the trade payables turnover ratio. So how do you get the trade receivable turnover ratio?
It would be 120,000 divided by 960,000.
Trade receivables over credit sales. So it would be trade receivables over credit sales into 365. So trade receivable turnover ratio is 45.63, that is making it 46 days. Inventory turnover ratio. What is the formula for inventory turnover ratio?
It's 120 trade payables divided by
Inventory
the
turnover
credit.
ratio. I asked the formula for inventory turnover ratio.
Sorry, it is the cost of sales. No, the average inventory divided by cost of sales times 365.
Okay, so your average inventory is 125,000. Your cost of sales is 600,000 into 365, 77. Trade payables turnover ratio.
Trade payables divided by credit purchases times 365.
It would be trade payables collection period. So you get 33 days. So your working capital cycle is inventory turnover ratio plus trade receivable turnover ratio minus trade payables, not turnover ratio. It is collection period minus trade payables payment period will give you your working capital cycle. So this also you were able to calculate.
Yeah.
Okay, come on, go to the additional information.
The directors of the business are considering a new strategy of increasing the selling price to $90 per unit and offering 10% cash discount for payment in the month following sale. The directors believe that demand will be unchanged and all customers will take the discount offered.
Calculate. What did you want you to calculate?
The revised
Say.
calculate a revised working capital cycle for 2017 if this strategy had been implemented from the start of the year.
Okay, how do you calculate that? Will there be any change in the inventory turnover ratio? First tell me that.
No, there won't be.
Why? What is the formula for inventory turnover ratio?
It is average inventory divided by cost of sales.
So there is
times
no
it.
changes in the average inventory. There is no changes in the cost of sales. So your inventory turnover ratio will not change. How about the trade receivable collection period?
Yeah, that would change.
Why will it change? What is the formula for trade receivable collection period?
Trade receivables divided by credit sales times
So
365.
trade receivables will also change and the credit sales will also change. So what is your new revenue? What is your new credit sales?
It is 12,000 times 90.
So your new revenue is 1080,000. How about your new trade receivables?
It would be
1,000 units will be sold into 90,000.
Wait, how is it 1,000?
1 minute, okay? Every month you're going to sell 1,000 units.
Yeah.
And the next month you're going to receive the payment.
Yeah, okay, fine. So December.
Suppose in Jan and Feb. So every month I'm going to send 1,000 units. Suppose I'm selling in Jan. I will receive the payment for in Jan. In February for the sales of Jan. So my trade receivables for Feb would be only the sales of Feb. My trade receivables of December would only be the sales of December. Because the November sales, I will receive the money in December.
Okay.
Okay. So whenever I am selling the next month, I am going to receive full payment. So the trade receivables in the month of Feb would be only the sales of Feb. Jan sales, I will receive full money in Feb. Similarly, trade receivables in the month of December would be full sales of December. November sales, I will already receive.
Okay.
So my new sales is how much? New revenue is 1080,000, 12,000 units at the rate of 90. And my new trade receivables would be the sales of December at new selling price. So new trade receivable collection period would be how much?
So 90,000 divided by 1080,000.
Trade receivables over credit sales, so it would be 31 days. How about the trade Trade payables payment period, will it change?
No, it won't change.
Why? What is the formula for trade payables payment period?
Payables divided by credit purchases times 365.
So neither the trade payables is changing, neither the credit purchases is changing. So what is the new working capital cycle ratio?
It is 77 plus 31 minus 33.
Okay. So it is how many days?
75 days.
What is this? What they are giving this?
Yeah, even I was about to ask, like, what's the difference?
Nothing. I don't do it that way. So we will stick to our method. Okay.
Okay.
We've calculated the revised working capital ratio, working capital cycle period. What was the old working capital cycle period? Okay. What you were asking is this. See, this they've taken the old working capital cycle period. They have deducted the old trade receivables collection period and they have added the new trade payables collection period, new trade receivables collection period.
Oh, okay.
Okay, so we will do what the way we do. So my initial working capital cycle period is 90 days. That means it takes 90 days to convert my net assets into cash. And my new working capital cycle period is 75 days. That means it is going to take 75 days to convert my net assets into cash. Should I proceed with this strategy?
Yeah, it would improve the working capital cycle.
Okay, by how many days?
15 days.
Okay, what else will you write?
That because of the
Business
discount.
liquidity will reduce your bank overdraft, which is too high. Okay, it will reduce. Business will benefit from the working capital cycle. You will reduce on your interest expenses. Profit will increase. There is no change in the demand. Every customer is going to take the discount. So you can go ahead with the implementation of the strategy. There might be some loss because of the discount that you're offering, but it will reduce your chances of bad debts, irrecoverable debts. It's a 5-mark answer.
Okay.
Okay. Any doubt with this?
No, no doubt.